ISOs are constantly having merchants ask them, hey, can you guys offer this solution or this software? And
Right.
now they're able to have kind of a toolkit of various softwares they can offer to their merchants. It turns into, I think, a win-win for everyone.
Hey everybody, James Shepard here with another edition of the Merchant Sales Podcast. Today I'm talking to the COO at Maverick, Ben Griefer, a friend of mine who is really doing amazing things working with ISOs to help them get ISV deals. So we really talk about this kind of collaboration or work together of working with an upstream partner to get a software company, and not even a software company, even just other e-commerce platforms and these big deals on the integrated payment side, and how you can work to go get those deals for yourself and bring them on board. So it's a really fascinating interview, whether you're a tech company or you're an ISO looking to make this all work together. So we have that. And then we have some sales tips, of course, from my good friend Rich Norton in this episode, as always, which is really exciting. And then Patti Murphy brings us a report about holiday spending and how that's going to impact margins and residuals and all this volume in the credit card processing space. As always, this particular episode is brought to you by Nativia. If you want to learn more about Nativia, head over to nativia.com/CC Sales Pro. They've always got some really cool stuff. They have the banking going on. They have Nativia Financial as well, which is, providing capital, funding, residual buyouts, residual loans, capital for growth. They have all of that. They also have their wholesale ISO program and many, many other things. As I've mentioned in the past, Full Stack Payments, which is a company that I helped to found and I'm the lead investor, we ended up building everything on top of Nativia and got funding from Nativia Financial. So obviously I'm a huge proponent of that. So definitely go over to nativia.com/CC Sales Pro and check out what they have to offer. With that being said, let's dive into this interview. Hey everybody, James Shepard here with my friend Ben Griefer, COO at Maverick. How you doing today, Ben?
Doing great, James. How are you?
Doing fantastic and off to a good start for the new year. I'm sure Maverick has big plans for 2025. So exciting
Oh, yeah.
stuff. Hey, so Ben, for those, I know you've been on the podcast quite a few times, but for those who maybe don't know you, give us a quick introduction to who you are and a little bit about Maverick, if you would.
Yeah. So I'm the chief operating officer over here at Maverick. Oversee kind of just all the day-to-day operations of the company. Our focus really has been to provide kind of a white labeled turnkey payment solution for ISOs, ISVs, really any kind of a sales organization looking to monetize payments under their brand and kind of leverage us on the back end for all the back office functions.
Yeah, great. So today we're talking about this really interesting shift in our industry. We've talked a lot about integrated payments.
Yep.
And very specifically, this idea of buy, build, or partner, whether it's the ISV or the ISO. And so let's start out kind of zooming out a little bit, Ben, and maybe you could tell us about what is your vision and Maverick's vision of the industry? You look at the next 3, 4, 5 years, what's going to change? How do you see integrated payments playing a role here?
Yeah, I think when you look at just historically the technology kind of entering into the payments environment, whether it's shopping carts, third party, SaaS platforms, whatever it is, they've historically been pretty agnostic. And now, you're seeing a lot more of this trend where they're looking to offer a payment solution, monetize payments, even make it closed loop in a way that other payment solutions cannot, be supported. So I think that's the trend we're going to continue to see is ISVs, SaaS platforms that have historically been agnostic are going to get more and more involved in the payments kind of environment. And we're definitely seeing that the last few years, and we're trying to kind of future proof our ISO partners so that they're able to work, collaborate with those ISVs as opposed to kind of seeing them as threats.
Yeah, I think it's interesting, Ben, that, you know, I love that you said that seeing it as an opportunity instead of a threat, because I think the last few years, threat is more the word that most of the ISOs would use.
Yeah.
And I really think that there's a huge misconception, and I'm sure we'll get more into this later, but there's a misconception that integrated payment deals have to be like, an ISV with $1 billion in processing
Yeah.
volume. And it's like, no, there's like thousands and thousands of like e-commerce platforms and this little ISV and that little ISV and this point of sale company, right? It seems like there's a kind of this has
Yeah.
really created like a sea of opportunity. it's not really a threat unless you just sit back and do nothing. It's really a sea of opportunity of these companies that are like, we want to make money from payments. How do we do that?
Yeah.
Right.
No, and it's funny you say that because we see the same thing where, they think ISV and they think Stripe or Braintree, and it's like, no, you have
Right.
all of these really just ambitious developers and entrepreneurs that come from the tech space and the product space looking to offer, a SaaS platform. And a lot of them are one-man shows or they have a small team and they really can benefit from partnering with an ISO that knows payments.
Right.
And yeah, I think there's a huge opportunity here. And yeah, again, it's the threat really is if you just sit back and do nothing, and it's not, a difficult sell or pitch to bring on ISVs essentially to grow your distribution as an ISO.
Right. Well, and it's like to me too, it's even we say ISV, right? We certainly have the vertical specific ISVs, but I
Yeah,
think even beyond that, even like the platform plays, there's a
yeah,
ton of, which are basically just an e-commerce deal. I mean, is really all
yeah.
it is. It's just it's an e-commerce deal with a bunch of sub e-commerce deals under it, right? So we're
No,
just seeing a
it's
lot of
that's
that.
yeah, yeah. It's very interesting. I think there's a huge opportunity for ISOs that can angle it in a way. Look at them essentially as sub agents, referral partners, distribution.
Right.
To me, it's kind of all one and the same.
Exactly. All right. So let's start by zeroing in here on the ISV for a minute. So we do have a lot of software companies now that listen to the podcast to understand the payments industry. So
Yeah,
for a software company, they have this choice, right? So they can say, well, we can, do we build, buy, or partner? Do we become a PayFac and build out our own kind of entire payments infrastructure, payments operations? Do we become our own ISO and go that route and we have this direct relationship, right? Or do we partner with a company? Talk about your vision of like these different options as an ISV would look at them.
yeah. I think generally speaking, an ISV, their focus really is on building, managing their SaaS solution, whatever that is, right? I think you can easily get distracted trying to become another company, whether it's a payments company or offer something that's pretty far from your core service. And when you look at the last 12, 18 months, there's been a tremendous amount of regulatory scrutiny with sponsor banks and various fintech programs, and it goes to show how important the risk and compliance function is of not only a payment company but any company in the fintech space. And I think when you look at the buy, build, or I'll call it white label, it's smart for an ISV to kind of focus on what they do best and what their core is, and not get distracted. Because at the end of the day, it's probably going to cost you a lot more money and be a huge distraction. So if you wanted to become a PayFac or your own ISO, it kind of depends on what you're trying to accomplish. If you have a really unique use case, or if you're simply just looking to monetize payments. And if you are, there's a very efficient, I would call it risk-free way to do it by partnering, where you can still accomplish managing, the user experience, the interface, having it under your company's brand and all the fun stuff, but not really be distracted or even having, I'll call it the burden of all of the back office functions. It's gotten, it's complicated to begin with, and it's only gotten more complicated. And I think as this whole just fintech, the various fintech products kind of boom over the next few years, it's going to draw on a lot of additional regulatory scrutiny, and it's more important than ever to make sure risk and compliance, which is really like our core here, on top of all the product development, is up to standard.
Yeah, it's it's really interesting. I'm almost having like flashbacks now when I talk to ISVs to like years ago when I would spend a lot of time talking to green agents that would come into the industry where they
Yeah.
would say things like, "Oh, I've got this really good deal with this company," and I'd be like, "What is it?" And it's like, "Oh, well, actually, you're going to lose your residuals in like 3 months probably,
Yeah.
or your Schedule A cost is so high." And it's like I'm having these like same kind of surreal conversations, but now it's with these software companies that are processing $20 million a month, and it's like, oh wow, you still have a horrible Schedule A, or
Yeah.
you your program, you're taking on risk that you don't even understand. You know what I'm saying?
Yeah.
Or it'll be like the other really common one is they have this kind of sales ops, and this is where, in my opinion, the ISO comes in, is they have like payment sales operation where they're not even really selling payments. And so they're getting 10% of their accounts to use their payment processing. And it's like, well, it doesn't matter how good your Schedule A cost is or your percentage
Yeah.
is. If only 10% of your merchants are using payments, that's a missed opportunity, right? So I think
And I
there's those
think,
same
yeah.
issues, you know?
Well, and it's funny you say that because I talked to an ISV, it just made me think, who actually very large group, very well funded. They went, full board to becoming a PayFac because
Right,
they thought that's what the right thing was to do.
right,
They ended up taking some sizable losses, and then they actually reverted back to, just your standard kind of agent ISO program where it's non-liability, et cetera, because they realized, yeah, like our focus is our platform, the SaaS program we've built. Yeah, while we want to offer payments, we don't really want to get tangled into underwriting risk, compliance. Like we just want to be able to offer a program where we can onboard merchants in a frictionless way. We have, some involvement with the UI, UX. It's all white labeled, but we kind of just want to stop there. We're not a payments company. We're a software company. And
right.
I think that's what the important piece here. And to your point, yes, it's what's the net, figure benefit, whatever you want to look. But at the end, when it's all said and done, if you're maybe making 5% less, but you take no risk, you have no overhead for underwriting, compliance, all the back office, you're probably going to be better off in the long run, especially when you don't have losses, you don't have to go through audits, you don't have, the distraction away from your core business.
Right.
And that's the important thing here.
Yeah. So let's finish up the ISV here by talking a little bit more specifically about what Maverick has to offer. You kind of alluded to that just now of taking a lot of this off of their back. What else do
Yeah.
you want to talk to these ISVs about? Maybe they're currently working with Stripe or Phoenix or whatever, and it's like, getting them to come over to somebody like a Maverick. And obviously the ISOs are going to be making this pitch on your behalf, of course, but it's like, what are your thoughts there? What do the ISVs have to gain from going to Maverick?
Yeah, so there's been a few interesting use cases on our end is we'll have an ISV come to us, either they are working with Stripe, they've worked with Stripe, they're looking at them, whatever it may be, and either um, they didn't know there's a revenue share opportunity, which always blows my mind,
Yep.
right? They
Yep.
went to Stripe initially just to have maybe an integrated payments solution as like a value add, and
Right.
then now they're realizing, oh, they can actually participate in the residual income.
Right.
So that's always a fun conversation because there's a lot of money on the table.
Right.
Another big piece is they'll be looking to get into certain verticals maybe that Stripe doesn't support. So obviously you have a tremendous amount of emerging markets. Some banks or processors will call them high risk, but there's a lot of opportunity there. We've seen some point of sale, companies get into monetizing payments, and they all have liquor stores that have nominal amounts of CBD, and maybe the processor they're working with doesn't support it. So it kind of depends, right? I would say the core underlying kind of value is monetizing payments and then drilling into kind of what the use cases are. And the general really just consensus is doing it in a way that you're kind of at the front end with your brand. At the end of the day, there's a lot of value that could be provided through an integrated payment solution. There's not only the rev share, or maybe get into new verticals, but it may supplement kind of their core software, whether it's
Right.
analytics. They're able to integrate certain payment mechanisms to make the business owner's job easier. Automated chargeback management, fraud prevention, data analytics around customers, cardholders, making the checkout process more frictionless and user friendly. So there's a lot that you can drill into, kind of get in the weeds on the
Yeah.
value, and ultimately kind of put it together as this really strong bundle that the merchant, is going to love. And then on the back end, you have now this huge stickiness factor.
Mm.
And from the ISO side, it's how do we, kind of angle ourselves as these subject matter experts in the payments field and
Right.
going to ISVs and kind of teaching them the ways of monetizing payments. And again, it's really simple. It ends up just being kind of this sub distribution where ISOs could white label downstream and bring on ISVs and,
Right.
have now this really good distribution
Yeah.
of sub, partners.
Yeah, and I think Ben, the other really interesting thing to me, the play for the ISO here is about distribution because
Yeah.
ultimately the think of it like I love what the word you used earlier was like a referral partner. To me, that really is what most of the smaller ISVs that the ISOs are gonna get, that's really what they want. They want to have a really streamlined referral partnership arrangement so that they can sell the software and then they can pass it off. And I've seen that over and over again with these ISVs where they might initially think, yeah, we're going to sell the payments in house. But other
Yeah.
than the really, really large ones, if they're given the chance to say, well, we could just outsource that and have somebody who understands payments that would sell it, they
Yeah.
generally are going to go that route. And I think that's a big inroad for the ISO to say, hey, guess what? We understand payments. We have people that can sell it. So, right, you sell the software, pass it off to us, we'll sell it.
Yeah.
Talk about that setup. So for the ISO, right? Like how would they set that up through Maverick, that kind of partnership, and what does your kind of product side allow them to do there?
Yeah, so our entire dashboard is an end-to-end system from the initial merchant onboarding through reporting, support tickets, analytics. We have our own payment gateway, ACH platform, et cetera, with an API that can also support everything if you want to systematically connect to us. So an ISV would essentially bring on the ISV, the ISO would bring on the ISV as essentially as a sub agent which we can white label downstream. That ISV now has their own login to the dashboard with their logo, their branding, their own URL, everything like that. And to your point, they could enter in a lead, have the ISO, work the deal. They can work their own deal. The ISO can set the splits. They have the ability to enter in support tickets, view reporting. So they can lean on us also from a support perspective. The other interesting point you had brought up too was there is, a lot of, I think, reciprocal opportunity here too,
Hmm.
where, ISOs are constantly having merchants ask them, hey, can you guys offer this solution or this software? And
Right.
now they're able to have kind of a, on one hand, a distribution of these ISVs, but on the other hand, now kind of this toolkit of various softwares they can offer to their merchants.
Right.
So it turns into, I think, a win-win for everyone because the ISOs are positioning themselves to have ISVs looking to monetize payments they don't
Right.
know payments. So you have this really good, I think, relationship that just naturally makes sense. And then on the other hand, now the ISO can offer these various software systems to their merchant base, maybe to their other sub agents. And the goal is you have kind of like this perpetual compounding just opportunity of
Yep.
bringing on ISOs, ISVs, and everyone being able to kind of cross sell one another.
Yeah. Yeah, I think it's really a fun time to be in the payment space if you understand the payments industry. I feel like this is where that really comes to have a lot of value is in these larger
Yeah.
deals. Two things I was going to throw out there that I thought you might find interesting. Two observations I've had lately of just where the opportunity is at for the ISOs. One is, initially, at least in my mind, there was a thought that like the ISVs that were the card not present was
Mhm.
kind of the easier opportunity, but I've started to really second guess that a lot. And what I mean by that
Yeah.
is, I think for one, the technology demand for that card not present merchant that wants the embedded merchant app and they want all this stuff.
Yeah.
Whereas like the card present, the point of sale company, that type, they have their own little, I mean, there's like 60 pizza shop point of sale systems or, you know what I mean?
Yeah.
Like, it's like there's enough to go around. When you go to that company, it's like, well, all they want is a VAR sheet.
Yeah.
Like, and you're going to email a
Yeah.
link for the merchant application to the to the merchant. Like it's a
Yeah.
normal deal. It's not really like we know, like
It's
in our
not
industry we know how to,
complicated.
yeah, we know how to sell pizza shops, we know how to sell hair salons,
Yeah.
whatever. So I think it's like the card present ones are almost easier, and it's like the hardest part of it is you have to deploy a terminal. And it's like, okay, like yeah, we can do that.
Yeah. And that's what I think, like people think ISV and monetized payments and they get caught up in all the buzzwords. But yeah, you can have just a point of sale company that has always been processor agnostic. Now
Right.
they're going to monetize payments. Well, great, bring them on as a referral partner, as a sub agent,
Right.
and they kind of do the initial selling
Right.
because it's all solution based to the merchant. They
Right.
just need a bar sheet, like you said. Those on our end get auto approved. It's
Right.
it's so easy, and now you have this potential distribution of like point of sale companies or whatever it is in the card present world where it's so easy
Yeah.
and it's scalable and you throw cash discount in the mix and then now you have
Yeah.
some higher margins and it's yeah
Yeah, it's and then you really get into the expertise around compliance and all these things that
yeah
these companies don't understand that they want to understand. But yeah, I mean, it's crazy to me. Like, I would love to know the number. This data doesn't exist, but it's like how many point of sale companies are out there that sell an average of 20 or less mids per month to a specific vertical.
yeah
I mean, there's thousands. Like, it's crazy how many of those there are, and there's a lot of agents that could go get these accounts and they do. 5, 6, 7. I consult for these people all the time, and they do five,
yeah
six, seven, grocery stores a month, and that's what
yeah
they do. And it's like, yeah, they just want somebody that can, talk to the merchant, have a good talk with them about their pricing because they already
yeah
have processing and they want to switch them over, and then they want to get a Varsity through Maverick and say, like, this is not rocket science. This is selling payment processing. We've done it for a long time. There's just an extra
yeah
player now that we can partner with.
yeah and I think like to our original point around the amount of ISVs out there, it's similar to point of sale companies. Ever since you had, the big hardware manufacturers roll out semi-integrated solutions,
Hmm.
point of sale companies can build, really good hardware and software and kind of leverage from a PCI perspective, those existing connections the hardware companies have to the various, processors
Yeah.
and they can go to market easily, right? They don't have to worry about PCI and security and all that stuff. They can build a really clean app, throw it on PAX hardware, and now they're a point of sale company.
Right.
It's no different than an ISV, right? Who's building
Yeah.
software, maybe that's for card not present. So I think in both environments, card present and card not present, you're just going to see, a bigger uptick and it's going to compound over the next few years of just these solution-based software providers looking to get into the payment space. And it's
Yeah.
a it's a great opportunity. I mean, you can very minimal cost to scale it from an ISO perspective because there's no
Right.
lead gen and all that stuff. It's
Right.
really just growing out that distribution and managing it. And
Yeah.
yeah, I think it's a really low cost way to scale as an ISO. And also
Yeah.
you're kind of setting yourself up for success by working with these companies as opposed to trying to compete with them.
Yeah. One other one I'd throw out there really quick. I'm not sure how much you guys have seen this with what you're doing with ISVs, but I've started to realize too that the kind of the gold at the end of the rainbow, so to speak, is the existing portfolio. So I've also noticed with most of the card present ones, they have done one of two things. Either they integrated with like a Stripe, which doesn't
Uh,
have contracts, right? Or they integrated with, WorldPay 10 years ago, and they
yeah,
have, they have 300 merchant accounts or whatever, 500 merchant accounts, but they're all out of contract.
yeah,
So I've seen that a lot lately, which has surprised me a little bit. So I think there's also an opportunity where it's like you start out by saying, "Hey, you're doing 5 deals a month. I'll help you with those five, and we'll start
yeah,
making money on it." And then once they see what you can do, again, the value of I know how to sell payment processing. It's like,
yeah,
okay, give me a list of 10 or 20 of your existing merchants and let me see what I can do. If I can use your brand name, let me see what I can do. And then you reach out
yeah,
as that company, "Hey, we have a new payment provider. It's going to help you save money, whatever it is. It's integrated." And next thing you know, you're flipping, 65 of their 300 mids in 2 months. That's a
yeah.
really big jump in residual.
Well, we've seen that, and that's where I think whatever the ISV is from a kind of a core offering perspective, if they can figure out a way, whether it's analytics, whether it's fraud prevention, chargeback management, whatever it is, they can figure out a way to use the payments as a way to supplement kind of their core SaaS offering,
Right.
then calling those existing businesses and saying, hey, either we can save you money regardless by moving over to our payment solution is going to make your job easier, right? If it's a point of sale company,
Right.
maybe they can auto reconcile, maybe they could automatically respond to those annoying chargebacks they get every once in a while. If it's card not present, analytics on the card holder, fraud prevention. So yeah, especially if you go into it with a collaborative way where let us leverage your name, you're just going to existing customers, offering them more value.
Right.
The close rate is through the roof. So
Right.
it's
Oh yeah.
yeah, yeah,
It's the easiest payments call you're ever going to make is, hey, I'm calling from your current point of sale company and we have a new
yeah,
merchant account provider.
yeah, exactly.
That's that's a pretty easy call. So,
Yeah,
well, Ben, this has been great. I definitely think we're on the same page as far as just, man, this is the future of the industry. And
yeah,
I think for ISOs, they need to stop viewing it as a threat and viewing it as an opportunity to say, wow,
yeah.
like not again, like we said, not even just ISVs, but tech platforms, e-commerce, like integrated payments is this huge sea of opportunity right now that exists. And the payments expertise and sales ability that our audience here, possesses, these are huge value propositions for this emerging trend. So, for those who want to learn more about how to partner with Maverick on deals like this, where would you send them to learn more?
So they can either email us at sales@maverick.hq.com, HQ as in headquarters, or they can visit us maverickpayments.com.
Awesome, Ben. It's always such a pleasure having you on here. Really appreciate you jumping on and sharing your insights with us today.
Awesome. Thanks, Jim, for having me.
So, Rich, I've really enjoyed going through this series with you on sales tips and concepts. And I thought it'd be really fun to kind of cap it off with a video about negotiation. We don't talk about this very much in our industry, but at the very end of the sales process, often it does come down to pricing, or it comes down to, well, I want this hardware for free or whatever it is. And so, how do you deal with when merchants are coming at you with a request to get more from you, and maybe even more than you're willing to provide? How do you deal with that?
Well, here's the thing, and this is a great topic. Sales is eliminating the objections before they come. So this is why it's important to find out right up front where they're at and what's going to be the best solution for them. So I don't want to get down to the end where I'm like, let's make a deal type of thing. And I understand there's going to be
Right.
different scenarios and different situations. And if it comes down to, hey, if this is what it's going to take to write the merchant, I'll look at the scenario. And if I need to give them good equipment, I'll say, look, if I was willing to do this for you today, which I've been helping a lot of businesses doing this, I'll be able to set this up, have this program or that program. I'll have the equipment here in a couple days and we'll get everything set up for you. If I was willing to do that for you today, would that be something that you would be excited about taking advantage of? So I think it's a really coming down to getting a commitment question from them, but also, and this all goes back to what we talked about before, finding out what's going to be the best solution, eliminating those objections before they come. And
Yeah.
then when I get down to the end, I want them to be fully understanding on exactly what happens, because I think a lot of people miss closing a merchant because they may not fully understand. So if you give a brief summary as opposed to giving a presentation and thinking, well, I hope they say yes, or what do you guys think? You ready to take advantage? And if you do that approach, they're going to be like, well, give me your card. You know, we need to talk about this. We need to think about that. But if you give a summary and you kind of point it all out, this is why everybody's very excited about our program. So here's what's going to happen. Today is Tuesday. You're going to get the equipment here in a few days. We're going to come back. We're going to set it up. We're going to show you how to use it. We're going to assist you in getting rid of who you currently have right now. We'll walk you through all that. And I like when we point that out, because they'll say, oh, you guys handle that too? Great. Yes, absolutely. All I'm going to need to get everything started, because at this point, everybody says to me, Rich, this is a no-brainer. What do I got to do to get the ball rolling? Who do you guys do your banking with? So I'm going to do some summary closes right there, some questions right there, and then we go for the close. So it's important that they understand everything. And
Mhm.
if I have to do a negotiation with them, or do something to help close the deal, I'll do that. If it comes down to, hey, we'll do a rebate for you for the first month or 2 months, if I was willing to do that for you today, would that be something that you'd be excited about?
Yeah, one thing I love that you said, Rich, is the order of when you're talking about kind of the details, right?
Yes.
I'm such a huge believer in this, which is, if you want to get people to say yes, you need to know where they're at. And it's difficult because you can't just say, well, if I asked you for your business right now, do you think you'd say yes? You can't say that, right?
Right.
But you
Yes.
but you need to know, because if you go for the close and they're not ready, you're going to get a let us think about it and get a card and you're done. So
Yes.
by saying what you just said, which is, okay, great. Well, so here's the way that this works. the equipment's going to come out here in a couple of days. It's going to be in a box, but we're going to come out here and help you, or whatever, right? Whatever the details
Right.
are. And then saying,
Yes.
I would like to say a line, is there any questions you have about anything I've said so far? And what'll happen is people will a lot of times they'll one of two things is going to happen. They're either say, no, that kind of makes sense. And then I know I got it. Okay, great. And then
Yes.
and then go into the question, right? Or they'll say, well, I don't know if we're for sure moving forward yet. I need to talk to my business partner or whatever the objection is. Well, now
Yes.
I can deal with that, but it's not a game over situation because I didn't even close the sale yet, really.
Yes.
And so, so then we have a lot of different angles. We can either move forward and continue down that path and say, okay, well, let's assume that your partner is okay with moving forward. If they were, are you willing to move forward? Are there any remaining questions you would have? And so there's a lot of angles we can go there. And so I think, Rich, the other question I would have though is when you get to that point and you start asking these other questions, right? Is there any other things that you do or tips you would share of ensuring that you have this very smooth closing process? Because I know this is like a landmine area where we tend to very easily lose the sale at this point. Anything else you do to kind of avoid the
Absolutely.
delays and avoid the let us think
Yeah.
about it and all that?
Absolutely. In fact, I'd love for us to do videos on because people will say, what do you do when they say I have to talk to my partner? Or what do you
Right.
do if they say I have to think about it? And this is where really when you get down to the end, it's understanding that the confidence comes from the beginning all the way down to the end. And you're
Yes.
taking that assume approach all the way through. But it really boils down to reading their body language and reading their eye contact. Because when you got down to the merchant, and I'll say this at this point, everybody says, this is a no brainer. What do I need to do to get this started? And they're shaking their head up and down. And you want to ask questions, when you point out questions that are going to make them visualize having the program already. So when you point out to them, we're going to come in, we're going to set the equipment up, we're going to show you how to use it. Would it be just you using it? Or do you have anybody else that needs to be here? So now what I'm doing is they're visualizing having the
Mhm.
program. So they're closing themselves and they're saying, no, it would just be me. Okay, excellent. Oh, my wife. Okay, good. When we come back, we'll call ahead to make sure that she's here. What is her name again, by the way? Great. So I'm marking that information down. So they're visualizing now where that they're already going to have the program already. So I would love to do, and we'll do more videos on getting down to the
For
end
sure.
and handling those objections. But as I always say, sales is eliminating those objections before they come. But it's got to be a nice, smooth all the way down. Have them visualize having the program, give a big summary, and then when you see that they're not ready to close, sometimes you have to go back and you have to resell something. So,
Right.
because I'll say, all I'm going to need from you today is a voided check. We're going to fill everything out. We'll get the ball rolling. And you feel hesitation. Now,
Mhm.
I'm not going to wait for them to say, well, I need to think about it. So I'm going to go back and I'm going to resell something else. And then I'm going to go back to asking those closing questions. So it may come to a point where I may have to do that 3 times, 4 times, and 5 times.
Right.
And then that happened to me with the merchant that I wrote today. In fact, he said to me, he goes, well, this wasn't something that I was thinking I'm going to do today. Well, I kept on reinforcing, not pressuring. But when it got down to the end, well, he goes, what do you need from me again? Okay, let me go get it. So I made it make sense to him.
Right.
And that's what this boils down to. So the
Yeah.
art of closing is an amazing thing. And then
Yeah.
the art of overcoming that objection in the
Yeah.
end. So I'd like for us to do some videos on
We
on
will for
closing.
sure. We will
Yes,
for
that'd
sure.
be
Right.
great.
So, well, hey, for those who want to connect, talk more about potentially joining the team, going through the training program that I know you guys have there for your salespeople, where would you send them to learn more?
Yes, reach out to me at my cell phone, 904-434-4635, or you can email payrock Rich Norton, Payroc Rich Norton at gmail.com.
Awesome. Thanks so much, Rich. Have a great day.
Thank you, my friend. Appreciate you.
So, James, preliminary data from Visa and MasterCard indicate consumers were spending quite healthily. That's not really a word, but healthy consumer spending during the year-end holiday season.
Yeah.
Visa reports that overall holiday spending was up 4.8% over 2023.
Okay.
MasterCard's preliminary data puts U.S. retail sales at 3.8% compared to the same period last year. And that's worth noting because it was a shorter shopping period this year. It was
Right.
about a week shorter because Thanksgiving was at the end of November.
Right.
Both data sets measure all forms of payment, cash, check,
Right.
and are not adjusted for inflation. So Visa's data shows more consumers headed back to brick and mortar stores. Out
Okay.
of total retail spend, 77% of payment volume was in store compared to 23% online.
Hmm.
These on the Visa network. It added that the total retail spend in stores grew at a rate of 4.1%, which is a little bit less than the overall spend, but a lot more than last year when it was 1.6%.
Yeah.
Online retail spending grew by 7.1%, which is a lot, but is down from 10.3% last year.
Okay.
So
Right.
online went down, in store went up.
Sure.
Some additional highlights: electronics were hot, clothing, accessories rose pretty healthily, and building materials were up 4.7%. I guess people were doing building projects during the holiday because
Interesting.
last year it was down.
Huh.
Yeah, isn't that interesting?
Very
I thought
interesting,
so
actually.
too.
Yeah.
It seems that the spin that Visa put on it was that consumers are turning their attention to the comforts of home.
Huh. Okay. Interesting.
Interesting, right?
Yeah.
So here's some key trends for the full holiday season uncovered by MasterCard Spending Pulse. The last 5 days of the holiday season accounted for 10% of all spending.
Hmm.
Consumer demand for experiences like dining out were stronger during the holiday season, with restaurant spend growth of 6.3% compared to last year. Increased spending on luxury goods compared to last year. Apparel was up, jewelry, electronics. Consumers did a lot of clicking, MasterCard says. For MasterCard, online sales grew by 6.7% year over year.
Hmm.
And in-store sales were up just 2.9%. Real obvious difference between MasterCard and Visa in that respect.
Right.
MasterCard said the e-commerce was especially popular among consumers in certain cities where e-commerce sales were well above the national average. In Tampa, for example, online sales were up 10.6%. Phoenix saw a 10% jump. Minneapolis was up 8.9%. What else we have here? Charlotte about 8%. Interesting, just in
Yeah.
terms of not any one specific region, but
Right. Right.
so on the dark side, the dark trend amidst all the spending was that fraudsters doubled down. Visa put out an announcement just before the end of the shopping season that during the height of holiday shopping, it had blocked nearly double the amount of fraud that it did during the same period last year.
Wow.
That's
Yeah.
pretty
That's a lot.
impressive. Yeah, yeah, it's a lot of potential fraud,
Right.
but
Yeah.
potential is the number
Potential.
is
But
the
they're
operative
they're
word
doing
here.
their job, so that's good.
Right. Thank God they're doing their job, right?
Right.
Yeah. So,
Right. Yeah. Wow. Really interesting stuff. I always love when you give us our holiday update. It's always good to I mean, for one thing, it's just nice to know, hey, the economy's moving forward. We're growing, which is always exciting.
right.
But I also think
Which is always okay.
our industry in particular is positioned very well, I think, for future growth and volume and things of that
Well,
nature.
yeah.
So,
And it kind of says, okay, you're going to get some healthy residual
residuals.
checks coming
Absolutely.
in.
We all love that. So, well, thank you, Patty, as
Of
always.
course.
Appreciate it.